Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I've got a huge amount of information which I want to add value to everybody watching this video. But I'll also be going through the greatest buy signal in Bitcoin history that has just flashed. Please be ready to take notes. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. You shouldn't take anything in my videos as financial advice. Please do your wider research before you make any important investment decisions. Okay, so with that out of the way, I want to go through the greatest buying signal in Bitcoin history that has just flashed. A buy signal. In my opinion, this is the most accurate signal that we ever get because it has very rarely been wrong. And here it is on the weekly chart. Yesterday we got this blue buy signal on the hash ribbons chart. That's the end of the capitulation for the miners over here. And if you look through history, you'll find that this is a signal that has been absolutely accurate all the way through in all of the history of Bitcoin. As you can see here, when we got the buy signals, this is when we had the rise, and this was to confirm it. And this one over here at the bottom of the bear market that we got. And then we got a series of these over here. Again, these were in correlation with the rise in the market there. Once again, when we came down from the 64,000, we got another buy signal here. And since this one over here in July 2021, this is the first one we're getting over here. So if all of these have been accurate, what do you think this one's going to be? So in my opinion, this is the greatest buying signal we're ever going to get with Bitcoin with any degree of probability. Everybody has to make up their own mind, but in my opinion, this is the best buying signal we're ever likely to get with Bitcoin. And not only on the weekly chart, but we also have on the daily chart another blue buy signal there on the hash ribbons as well, which is confirming the weekly chart. Okay, so I'm now going to go through some very general important information which you really need to take a note of. It's going to be based around the 60-day cycle, but one of the things that I have to say to people is that whenever we actually turn around at the bottom of a bear market, whenever you get the big danger we have, and this is all to do with psychology, and as you probably noticed if you've been watching my videos, I've been going through the psychological aspects of the market in the last many videos now. And that is because it is absolutely imperative that we get this psychology in perspective to what is happening in the Bitcoin price. And that is mainly based on the fact that when you top out over here, and people have been making good profits along the way here, then when they ride those profits all the way down here, what happens is that they get totally drained out here and they see their portfolio fall by so much, and in this case about 80%, that the first sign that we get of an increase and we get to a particular neckline, they're very hasty in taking profits because they want to protect the downside here because of what's happened over here. So the first point I want to make is please don't be too hasty in taking profits. And I was watching many videos where one or two of the YouTubers were very honest, and they said that when it came to 18,000 over here, that's where they took profits. And as I warned all my subscribers in the last video, if you watch my video, I said that this is going to be more likely a trap. I've got this in my mind that this is going to be a trap. And this is exactly what's happened. We've gone all the way through. And this yet may be another trap here because people know that this is a very key level at 21,000. And the reason why it's not a good idea to actually be hasty in taking profits is because, yes, the market may come back down here, but you don't know to what extent. It could turn around from here, it could turn around from here, it could even go back all the way down here. We don't know. But with the strength of the market, as we've seen over here, the higher degree of probability is that we're going to get more upside. And the problem with getting out at this point would be that it's very difficult to get back in. Because if the market doesn't do this and goes and does this instead, which is highly likely, then you're going to be left with having to chase the market up here. So while the market has gone up by 40–50% up here, you'll have lost out on the biggest part of the move, maybe up here. And the sensible thing, the higher degree of probability to make the most amount of money would be to actually ride it rather than to get off the Bitcoin train with the hope that it might do this so that you can get in lower here. But I can assure you, when it does go down there, if it does, that the people's thinking will be that it's going to go much lower, and you never really buy back. And if people are looking for a proper place to take profits, I would suggest that the best place and the higher degree of probability where you could get a good pullback would be, I would think, in my opinion, please remember, this is not financial advice, I'm just sharing my thoughts on this. And the best place I would say is basically at two places. This would be a very good place here at 25,000, and the next one would be at this place here. So I would expect some sort of a pullback here. To what extent we get that pullback, we don't know, but certainly if we don't get a pullback at the 25, there is a very, very high degree of probability that we'll get a pullback here, which will be probably a major correction. So those are the two levels I would be very much focused on to take profits. And people keep asking me, is this the end of the bear market? Well, all I would say is that this is a good sign that the end of the bear market has been triggered here. But you'll only be really sure of it, or much, much more sure of it, when it gets above the 25,000. But for me, as I've been saying over the last many, many videos now, over many months, that it's better to get a core position. So I've been in a core position about 75% when the market came down to 17.5, and I shared that with you in the previous videos. And I said that the last 25% would be if there is a fall down. So this is where I've been accumulating, and I've been saying that for the last many videos as well. One of the main reasons why I'm saying that 25,000 is possibly the best opportunity to actually take a profit, if you are going to do that, for long-term investors, it's best to just ride it all the way up now to at least 40,000 or maybe 50,000, because that's where probably the high is going to be in 2023. But the 25,000 is because it's correlating with the 200 simple moving average. And we know that this historically has been a major support and resistance. If you look through history, this has been one of the key areas where people find support and for the market to bounce off from. But this time we actually broke through down here, found resistance, and we've been down ever since. But as soon as the market has turned, and we hope that the market has turned, that's our understanding, that's the narrative based on the price action here. And if that is the case, then surely we're going to find resistance at least one more time on the 200 moving average, and that's exactly at 24.7 at the moment, but it's a rising trend line. So in the next few weeks, when we get to that point, it'll be exactly at this point here at 25. So that is a very high degree of probability trade to be able to take some sort of profits, if that is what you're inclined to do, for a pullback to possibly the 18,000 or the 21,000. Obviously, the safer bet would be the 21,000 from here. And if you do look at the weekly chart, this is the big candle, the big Marubozu candle that just finished yesterday. And it may well be that we're going to get a few more green weekly candles up to this point here. So on the weekly chart, it doesn't seem the right thing to do to be able to take profits here. We may get a minor pull down here. To what extent we get that, we don't know. But to me, this is just the first sign that we're getting of a bounce from these levels over here. And we may have quite a few candles to go yet. Also, if you have a look at the actual candlestick patterns that are developing over here, those with a discerning eye will have noticed something very similar to what's happened over here in November. So while we came up here, we got one small-bodied candle followed by a long red candle afterwards. And what we've got here is the opposite of that. We've got one red candle followed by a small-bodied candle followed by one green candle over here. And those who understand candlestick patterns will tell you that this is what we call an evening star pattern, which is bearish and brings the price down. And this pattern is called the morning star, and this does the opposite on this side. So we'll see how that pattern develops, but certainly that's the first sign that we're getting that the market, as it turned over here to the downside, is now turning back to the upside here. So coming back to the 60-day cycle, so far these have played absolutely as we've been explaining it over the last many weeks and videos now. And what we've got is the current 51-day cycle end from the previous cycle, which ended after 63 days from the previous cycle, but this cycle has ended much quicker, and that again is a clue that there is a huge amount of money, a huge amount of liquidity that's coming to the market to do this. So we got an early warning signal over here with this candle, and as I mentioned this in the Twitter many times in the past, if you've been following me on Twitter, this was a great signal here, but for me the confirmation was this candle here. This gravestone doji candle, which was followed by a candle that closed above the gravestone doji candles. At this point, we would have been expecting the market to have been coming down, but instead it went up. And as I've been saying in the last many videos about the next 10, 20, 30 days being critical, this is exactly how it's played out here. So currently we've got the start of the cycle on here on day 51, which is on the 30th of December. And the mid-cycle now is on 29th of January. And as you can see here, we haven't actually come anywhere near the midpoint of the cycle yet. And if this is to be the bottom over here at 15.4, then usually what you would get out of a bear market is a right translated cycle, which basically means that we would top off at the midpoint after the midpoint has happened. So this is the 30 days. But if it's going to be a right translated cycle, then it's going to be maybe 35, 40 days. So this may have quite a way to go yet into the mid-cycle of this 60-day cycle before we make the expected turn to the downside, where I would expect a higher low to be formed, possibly at the 21,000, but if we get a deeper correction, it'll probably be at the 18,000. One word of warning, if we lose the 18,000 again, then this becomes a fake out and a very big bull trap. So be aware of that, because nobody knows where the market is going. We've only got the charts to look at, and this is where I would say that we would top out at about 25,000 into the midpoint of the cycle, and then on the correction we're more likely to come back to the 21.4 or the 18.3. But if we lose the 18,000, that would be a big bull trap over here. So at the end of the day, it's everybody's choice whether they want to take profits here. A lot of people tried to take profits here with a view to a pullback. It didn't come, and they've now missed out on here. And now it's come to this level. They're frightened to get in because they now think that it's going to be a pullback down to the downside here. And they may well be. But for me, that would be too much of a haste to take profits anywhere in this region. And it's best to ride the market wherever you get a correction in between. The main point to consider would be that 25 and 30 are more likely to be points of correction. It also depends on whether you're a long-term investor or a trader. Obviously, if you're a trader, then it might well be a nice point to take minor profits here and see what develops. But if you're a long-term investor, then obviously this would not be a great point to be trading. So we should really have at least a 18 months to 2-year view. If not, wait until the end of this cycle, which I would expect by the end of 2025. So we've got 3 years, and this is just the start of that 3-year period. A quick look at the CPI data as it came in last week. As I mentioned in my previous video, when the figures were coming out, 6.5 was a consensus view for everybody from the 7.1% the previous month. We came in exactly at 6.5. And after the initial fall in the market, what we've got is a big rally in all markets. So this is looking really, really good. And we expect the Fed to increase interest rates not by the expected 50 basis points as per before, but 25 basis points. And that should give another boost to the markets. Okay, a quick look at the dollar. We got our target here, absolutely correct here. And I mentioned this particular candle many videos ago, that's telling you that this now is a market that's on its way down. And certainly this particular fall now is confirming that we're in a 3-year fall in the dollar market. This was my first target down here, and as you can see, it hung around there for a while, and again we got another shooting star candle over here, which is giving us another sign, like just like up here, to go to the downside. We're going to be going further down here. So a lot of weakness in the dollar, as you can see, and that can only be good for the markets and Bitcoin. And if you've been following me on Twitter in the last few days, you'll know that I've been actually looking at some charts and giving you some clues about what's happening here. So this was the weekly chart, And this blue line was the 80 MA, the yellow the 21 weekly MA. And you can see here quite clearly we're having the first breakout since this point here, which was in March 2022. So 10 months later, this is the first sign that we're going back to the upside. And also I mentioned this hash ribbons blue buy signal here as well. And if you want to follow me on Twitter, then you can go to the link below all of my videos and click on there. Finally, a look at the Bitcoin miners portfolio to give you an update exactly where we are. We started this just under 2 weeks ago with a target price of $1 million with a starting capital of 100,000. So we wanted to do a 10x in 2023. These are the close of prices last Friday, and these are the chosen 8 companies that I've decided to invest in with this $100,000 target. And I've said in the last few videos that my 2 fastest horses amongst this group of miners is going to be Marathon and Cypher Mining. So these are the current positions on here. These are the profit and loss positions here. As you can see, they're all in the green, so we've got very good profits here. So as you can see, just with Marathon, we've gone from $4.22 to $7.68, and Cypher Mining from 0.65 to $1.11, and that's an 81 and a 70% respective increases. So far, the whole portfolio has actually increased by 62% within the space of less than 2 weeks. And we've gone from £100,000 capital to the current running total of 161. So we're well on our way to $1 million target in 2023. Okay, we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.